So last topic about debt security is reclassification. So is reclassification allowed for impairment in debt securities? The answer is yes. When and only when an entity changes its business model for managing financial assets, it shall reclassify all affected financial assets. So unlike equity securities, debt securities are classified using the business model. So if the business model changes, the classification changes. For equity securities kasi we used irrevocable election, di ba? For equity securities, trading, automatic PL. For non-trading, there is an irrevocable election. Therefore, for equity securities, no reclassification is allowed. So, reclassification investment in the securities. First, from amortized cost to FBPL. So, ano yung mga accounting considerations? Its fair value is measured at the reclassification date, and any gain or loss arising from a difference between the previous amortized cost and the fair value is recognized in profit or loss. So, the fair value at the reclassification date is the initial amount of your FBPL investment. And in the difference of the amortized cost, yun yung dati mong measurement, and the fair value at the reclassification date is taken to PL. Baliktad naman, FBPL to amortized cost, its fair value at the reclassification date is the initial cost of the amortized cost investment. Next, amortized cost to FBOCI. So, kanina, amortized cost to FBPL. Ito naman, amortized cost to FBOCI. Same lang. Pero, the difference of the previous amortized cost and the fair value at the reclassification date is now taken to OCI. Next, FBOCI to amortized cost. So, the financial asset is reclassified at its fair value at the reclassification date, and the cumulative gain or loss previously recognized in other comprehensive income is removed from equity. So, tatanggalin mo. So, para kang nagbenta ng FBOCI and adjusted against the fair value of the financial asset at the reclassification date. So, ibabalik mo, idadagdag mo doon sa fair value. So, kung UG, idadagdag. Kung UL, ibabawas. As a result, the financial asset is measured at the reclassification date as if it had always been measured at amortized cost. This adjustment affects other comprehensive income but does not affect profit or loss, and therefore is not a reclassification adjustment. Kasi nga, di ba, for FBOCI investment, other than amortization of discount or premium, we also record unrealized gain or losses due to change in fair value. So if we are to reclassify an FBOCI investment to amortized cost, it's as if from the very beginning, amortized cost ka na. So anong gagawin mo? Tanggalin mo yung effect ng unrealized changes, unrealized gain or loss due to changes in fair value. Okay? Next, FBPL to FBOCI. So ito walang nagkaiba, walang halos nagbago. The financial asset continues to be measured at fair value. Subsequently, so yung dating pinapasok mo sa PL na changes in fair value are now reported in OCI. And FBOCI to PL. So financial asset continues to be measured at fair value, and then the cumulative gain or loss in other comprehensive income is reclassified from equity to profit or loss. So, FBOCI na naging PL, it's as if nagbenta ka. Yung accumulated OCI na nasa equity is reclassified to profit or loss. Okay, so to summarize all our discussions, let's have this illustration. On January 1, 2019, AMV Incorporated purchased a 4-year bond investment with face value of 1 million and its stated interest rate of 12% for 1,063,394 pesos. The bond was acquired to yield 10%. Interest of the bonds are payable every December 31. On April 1, 2021, 600,000 face value bonds were sold for 101 plus accrued interest. The fair value of the bonds on December 31, 2019, 2020, and 2021 are 108, 106, and 104 respectively. Okay, so our first classification is FBPL. So what are the entries? On January 1, the acquisition date, we debit investment credit cash for the acquisition cost of 1,063,394. By December 31, 2019, we will record the receipt of interest. So 1 million face value times 12% nominal is 120,000. Again, we disregard the yield rate for investment classified at FBPL. So debit cash, credit interest income of 120,000 on December 31, 2019. And then, other than the entry to record the interest, we will also prepare an entry to update the carrying value of the bond. So by December 31, the fair value is 1.08 multiplied by 1 million less the acquisition cost of 1,063,394. So that is 16,606 increased. So debit the investment account, credit the UGUL in PL account of the same amount. We will repeat the procedure in 2020. So debit interest income, cash and interest income 120, and another entry to update the carrying value. This time it's a loss from 1.08 to 1.06 times 1 million. So how much? 20,000. So debit UL and credit investment 20,000. Next, on April 1, date of sale, we will update first the interest receivable account. So because on April 1, the 600,000 bond is sold to a new investor, new creditor. Then other than the 600,000 bond, we will also include in the sale the interest of the 600,000 for the first 3 months, because by the end of the year, when the debtor pays the interest, he or she will only pay the interest for the 400,000, because the interest for the 600,000 will be paid to the new investor. Okay, so by April 1, we will record the accrued interest for how much? So that's 1 million times 12% times 3 over 12, 30,000. So debit interest 30, credit income 30,000. But to record the sale, we will not include the whole 30,000 because 30,000 is good for 1 million. Tama? But only 600,000 out of 1 million was sold. So that's 30,000 times 60%. 18,000. Only the 18,000 will be included in the sale. So, to record the sale, debit cash of 624,000. Paano kinompute? That's 600,000 times selling price of 1.01 plus 30,000 times 60%. Magkano yung kanina? 18,000. So, 624,000. Yung loss later na yan. Ano yung credit natin? Ano yung binenta mo? Your investment account. 600,000 times how much is the latest fair value prior to sale? Yung December 31 last year, which is 1.06. So 600,000 times 1.06, 636,000. So investment account is credited for 636,000, and another credit for the interest receivable, because as mentioned earlier, the interest receivable will be collected from the new investor. So 30,000 times 60% again, that's 18,000. So 636 carrying value of the bond sold plus interest receivable of 18,000, we have 654,000. But we only received 624,000, so we will have a loss of 30,000. Now, on December 31, 2021, we will record the receipt of interest. Okay, so how much will be the interest received? Okay, so first is the 40% of the accrued interest on April 1. So 30,000 times 40%, that's 12,000 plus the interest of the retained investment, 400,000 times 12% times 9 over 12. 12 times 9 over 12 is 36,000 plus 12,000, we have a total of 48,000. So debit cash, credit interest income, 48,000. Next, To update the carrying value of the investment, it's this year 104, last year 106, so 1.06 minus 1.04 times 1 million, no, times 400,000, the retained investment. It's 8,000. So decrease from 106 to 104, decrease of 8,000. So debit, unrealized loss, credit investment, 8,000. Okay? Now, shortcut for the computation of the loss. So, shortcut is how much is the selling price? 1.01. How much is the carrying value? 1.06. So, 1.01 minus 1.06 is negative 0.05 times the face value of the bond sold, 600,000 times negative 0.05, that is 30,000. Okay, so how about for debt securities at amortized cost? So to help us answer the problem, I've already prepared the amortization table. Okay, so as you can notice in the table, by April 1, 2021, I've updated the carrying value. So basically, pinagmamultiply ko lang yung mga interest ng 3 over 12, including the amortization. And then, deduct mo yung carrying value ng investment sold, 60%, and then the retained is 412,231. That's the 40% of the carrying value on April 1, and then continue with the amortization. Okay, so our entry on January 1, debit investment, credit cash for the acquisition cost. And then by December 31, our entry will be to record the interest received and the amortization of the premium. So debit cash, 120,000, interest income credit, 106,339, and investment, 13,661. The amounts were just lifted from the amortization table. And then on December 31, 2020, same process, debit cash, credit interest income, and credit the investment account. Next, on April 1, 2021, the date of sale, same with what we did with the investment at fair value through profit or loss, we will update the interest receivable account. And of course, update na din natin yung book value or carrying value ng investment account. So, we debit interest receivable by 30,000, credit interest income by 25,000, and credit the investment account by 4,132. Again, the amounts were just lifted from the table. Next, to record the interest, the sale, debit cash, 624,000. Again, the same with the amount received when we sold the fair value investment through profit or loss. Loss later na yan. Credit investment account. Sino si 618,344? That's the carrying value of the investment sold, lifted from the table. And then interest receivable is 18,000. So our loss is 12,344. So paano natin kukumpitin yan pag shortcut natin? So sold investment is 618,344 less the selling price, 600,000 times 1.01. So 600,000 times 1.01, 606,000 minus carrying value of 618,344. So your loss is 12,344. And then by December 31, 2021, to record the interest received, again, same concept with the FBPL, 36,000 plus 12,000 accrued on April 1 but was not received when the bonds were sold. So total of 48,000, and then credit interest income of 31,000, credit investment of 4,959, and credit interest receivable, yun yung portion ng 40% ng 30,000 on April 1, 12,000. Okay, lastly, investment in debt securities at FBOCI, the most complicated of the three. So, to help us answer the problem, other than the amortization table, I've also prepared this table. So, to show us the changes in fair value. So, just to explain, now, say for example, in 2021, fair value is 1,080,000 less the carrying value of 1,049,000. 30,000 is your cumulative UGUL. Less any UGUL prior in prior years, you have current year UGUL. So ito yung gagawa natin ng entry, 30,267. Okay, and then in 2020, so again, fair value less carrying value, you have UGUL cumulative of 25,000 less the cumulative UGUL last year of 30,000. So this year we have UL of 4,000. So ulit-ulit lang. Okay? So January 1, entry, debit, investment, credit cash for the acquisition cost. By December 31, sabi ko nga, hybrid itong method na to or classification na to, we are to prepare two entries. First is the entry to record the amortization, interest received on the amortization of premium, and the second entry is to record the change in fair value. So, to record the interest received on the amortization of premium, debit, cash, credit interest income, and credit investment. So, all lifted from the table. And then to record the change in fair value. So, for 2019, we have 30,267 positive. So, UG. So, debit investment, credit UG, 30,267. In 2020, debit, cash, credit interest income, credit investment, all lifted from the table. And to record the UL, this time it's UL debit, UL credit investment 4,973. So if we are to ask how much is the carrying value of the investment on December 31, say 2019. So paano mo i-solve yan? So first amount debited to the investment account is 1,063,394. On December 31, credit mo siya, so minus 13,661. And then, dinebit mo siya ng 30,267. Magkano ang lumabas? 1,080,000, which is also your fair value. Kaya nga, investment at fair value through OCI is presented at fair value. Okay? Try mo sa second year. So, 1,080,000. On December 31, credit mo siya ng 15,027. And credit mo pa ulit siya ng 4,973. So, magkano ang lumabas? 1,060,000. Okay? Very simple. Next. Okay. On April 1, 2021, first is we will update the carrying value of the bond. So, same lang sa debt securities at amortized cost. So, lifted from the table, investment, credited by 4,132. Now, other than updating the carrying value to equal to the amount in the table, we will also update the carrying value of the bond to equal to its latest fair value, which is the selling price. So, gagawin mo siyang equal doon sa 101, which is the selling price of the bond. So, punta ka sa table number 2, line third column, 4,121. So, the fair value is 1,010,000. As you can notice, no? Kahit 600,000 lang yung binenta mo, the total bond was updated to its fair value. So, 1,010,000 versus the carrying value. So, you have a cumulative UGUL. This time, it's UL of 20,575 less previous year's UGUL of 25,293. So, we will have a 45,868 negative. So, UL. So, debit. UL, 45. Credit investment, 45,000. Next. As I've mentioned a while ago, how do we determine the gain or loss on sale for investment in debt securities at FBOCI? Ang sabi ko, the cumulative UGUL in equity is transferred to profit or loss. Yun ang nagiging gain or loss on sale mo. So, yung 20,575 na negative doon sa third column mo, third row, negative 20,575 is your gain or loss on sale, assuming we sold the total 1 million bond. But since only 60% of the bond were sold, so 60% lang ng UL na 20,575 ang magiging gain or loss. To be specific, it's a loss kasi UL eh. So 2,575 times 0.6, 12,345 or 12,344. Familiar? Yes. Yan din yung loss mo kanina sa investment at amortized cost. Minention ko yan, gain or loss on sale for investment at amortized cost and for investment at FBOCI is the same. So, entry for the sale, cash 624, loss the same, credit investment 606, interest receivable 18, and UGUL 12,344. Okay? Next, on December 31. So, anong matitira sa mga entries natin? Again, to record the interest received and the amortization of the premium. So, again, cash 48,000, that's 36,000 para doon sa 400,000 times 9 months, and then yung 40% doon sa nauna mong inakro na 30,000. And then credit interest income, investment, and interest receivable. And finally, to record the change in fair value in 2021. So debit, investment, credit, unrealized gain 16,000. Nandun sa table number 2. Okay? So that's all. Thank you.